at least be 6R for this low here. So if you see how it plays out, if I'm honest, it barely even gives a reaction. It kind of just blows straight through. And a lot of traders would have got caught in that. Thankfully, we don't, because we've got it right education, and we know that that is now a smart money trap. And that is now a 6R trade that I took and I was out of. What's happening, family? Hope you're doing well. It's your boy Rons with another trade breakdown. I'm actually going through a couple of setups on this day, and I think you'll find this useful, right? So I'm actually going to break it down from the beginning of the day so that you can basically think with me and go through the market price action with me, so you can get a full context and a full understanding of what I was looking at and how the price played out that day, right? So I'm going to start with a high time frame context, and you see here we've got the H4 time frame on GBPUSD. This is on Thursday the 9th of November. And what you've got here is at the bottom here, you've got a demand zone where you had an inducement here, a minor small little inducement, right? It wasn't a minor one, it's more than a minor one, but an inducement down here on the M4, so a H4, and then price, shoots up, creates a relevant breakup structure, which is this red line. And what I will do actually also is just mark out this line here, because this is, part of one of the main inducements, and you've got the internal inducement before the break. And then you see price comes down and you have all of this build up of liquidity just sitting here. Yeah, price comes down, gives a mitigation here, comes back up, mitigates this zone up here, then comes back for the final time, hits into this demand zone and this inducement zone. So it gives an inducement mitigation, and then it keeps being bullish from here. So you can see it's bullish, breaks a high here, comes down, sweeps liquidity, moves higher, comes back down, sweeps liquidity, moves higher. And then we're here now and we've taken out a H4 high, right? So price is currently just retracing. It's been falling for the last couple of days. So for that whole week, we've been bearish, and it was clearly a retracement, because when you see this kind of price action, and with this kind of base underneath, the odds of it just coming down to just break through all of this is low, before it takes more liquidity on the bullish side. So if we go back down to the 1 hour, you can see a little bit more clearer with the inducements here, and then price going higher. So for example, down here, price induced these lows, mitigated this demand zone here, went higher again, price induced these lows, mitigated this demand zone here, and then flew higher, right? When you can start understanding these kind of concepts and you can spot these in the market, it makes trading a lot easier, because you can see which zones should hold and which zones shouldn't, right? So what you can see here, price started to, took this high here, and then we started retracing, okay? So if you go down to the 15 minute, this is when price starts to get a bit more interesting, because then you can start to see price slowing down. See, up here it was a bit more aggressive with the full one, and now it's starting to slow down and give us more of a build up, right? So if we look here on the 15 minute, you can see that you got basically this trend line look, right? So you got all this liquidity here, so I'm going to mark it out with you guys. You can see it here on the 15, right? And I'm going to the 5 minute to make it a bit more clearer, because the 5 minute is what I mainly use for my time frame for marking up my charts. So we have the build up here. So you can see these highs, like a trend line liquidity here. You've got these highs here, which are all equal pretty much. You've got a small inducement here, but on the higher time frame, they are a bit more equal. Then you've also got, you could say, like a channel kind of build up as well, like this, right? So it's channeling up, and then you've got a couple lows that have been taken out. So for example, you got this low taken here, and then you got this low that was taken here, and then you've got on the smaller time frame on the M1, you've got a trend line here, liquidity taken. So you got an inducement here, the sweep, break of structure, and then this zone holds, right? This zone completely holds. So then what do we have here now? Okay, so now you can see, I'll remove this for a second, but now you can see you've got these equal highs, relatively equal highs here, right? you've got, you know, say a bearish channel down like this. It could be cleaner, but nevertheless, it's still a channel down, right? But I'm gonna just remove that for the sake of a clean chart. And then you've got the zones now that are holding. So you can see here is, first of all, you've got this zone here that was this was what created the main inducement here. This high is what took out this low, right? So you say this is a supply zone, and then that supply zone held for a second before it came back to this demand zone. This demand zone held, and then we blew through, right? So what you've got here is, first of all, is you've got this M5 demand zone that you could say maybe like order flow, because that's where the flows, that's where the orders are flowing, and it hasn't been mitigated just yet. But you've also got this zone here, which is an inducement that has taken place here. You can see the same price action, inducement taken. So inducement with these lows, price went higher, right? So you can say this is yet to be mitigated as well. What I can let you know is that at the time, I didn't really spot, I kind of missed this level here. I don't know how, but I did. I didn't really take much notice of it. And this is how it played out this is what it looked like during, say, London Open, all right? London Open was pretty much now. And then what we had also is, it's the stuff you start to see with your own eyes when you start to backtest more, but you got a build up of this channel as well. Yeah, so it's like you got a channel here too, like this, right? But again, I don't want to confuse you guys with the charts, but this is what I'm seeing. So you've got the main inducement here, you've got these demand levels that are holding, and you've got the equal high. So for my eyes now, it's like the clear level that I want to be taken. I always mention that I always want a certain level to be taken before I get into a trade, right? In my eyes, this level was obvious. This level up here, these relatively equal lows, was obvious. Sorry, relatively equal highs was obvious to be taken. And that's what I was looking at. So maybe because I was focusing on there, I was hoping that maybe the price would just keep going, and then I would be able to get my trade there. Maybe that's why I missed this first move. Can't remember, but let's go through the price action. I'm going to tell you what happened. So if we keep going now, London Open happens, right? And all of these trades in here, I am no longer interested in. See, beforehand, I used to really try and trade the 1 minute chart, and I found myself taking a lot of unnecessary losses, and it caused a lot of unnecessary stress when I'm on the chart, especially like if when I'm at work. If I'm at work and I'm trying to take trades and I'm trying to get in on these 1 minute scalps, it's like it can be stressful, right? So these kind of trades here where you can trade them, but I'm not interested in this current moment in time. So if I fast forward, like, look, see what happens here, look, straight away. So you've got this channel here, bearish channel, right? And this is an inducement of this channel. And then this liquidity here, see the trendline liquidity on the M5 or M1, and then it's tapped into this M5 demand zone. But the M5 demand zone is actually an inducement mitigation. You see, there's an inducement here, lows taken, goes higher, right? That's an inducement mitigation, okay? So go down to the 1 minute. Let's see the price action a bit more. So you can see it mitigates there, and let's see how it plays out. Cool. So looking at this trade now, go back to the 5 minute for a second. You can see here that this is a super valid trade. You've got the main inducement here. You've got demand zones that are holding. You've got the bullish channel. Then you've got the bearish kind of corrective channel coming down, right? And this is all liquidity that is engineering. That's all prices, engineering liquidity. But the key thing here is we have the inducement here internally, right? Inducement that is yet to be mitigated. There's no mitigation yet. So it's valid up until the highs have been taken. Once these liquidity highs have been taken, that's when I would say this low, so this inducement mitigation wouldn't necessarily be valid. That's how I would see it anyway in regards to this current price action, right? So looking at this now, if I was to try and enter this trade, I would have had to have entered on the efficiency of the M1 candle. Because when you got that aggressive push down and aggressive move away, that is enough of a confirmation when it's taken out the lows, so these lows have been induced, aggressively, and it's mitigated a demand zone. Sorry, mitigated an inducement zone, and then we've aggressively moved away. That is enough for a confirmation to enter a trade, but you'd have to do your own backtesting on that to really be able to do it successfully and confidently, okay? And then you would target, you know, the external liquidity. So internal liquidity being induced, external liquidity as a target. All right, this is when this is where things start to get interesting, because this is where I then got into my trade. So if I fast forward things a bit, see what happens. We are going boom, right? So cool. So this was a great trade, right? A trade that I did not take, but nevertheless, it's a solid trade, one to learn from, right? So these highs have now been taken. So if this liquidity has now been taken, right? What's the next thing that's just bound to happen? Next thing that's bound to happen is that price is going to go for another pool of liquidity, right? So it's a major pool of liquidity has been taken now. So price is gonna go for another pool of liquidity. So as price moves on, I'm gonna explain something. So as you can see here, price took out the high. We've gone to the M1. And then what it done is, yeah, there we go, perfect. And then, hold on a second. Yep. Yeah, we're good, cool. Let's go back a second, it's cool. So price took out the high, all right? So this major liquidity pool to the high, to the left, okay? Took out these highs and then aggressively moved away. All right, so again, you can see that this is a clear inducement to the high to induce these breakout traders that want to get these breakout trades, right? So aggressively moved up and then it moved away. But what's also interesting about this is that price gave us a nice failed swing. Yeah, so what's a failed swing? A failed swing is when you got the high and then price retrace and then it tries to move up again to create a new high, but it fails to, and it creates another low, right? But upon that, so you got the failed swing here, which is that way, it's one of my entry models. Failed swing here, and then what the fact is, you've also got a perfect relevant break of structure here, right? So if you're going to 5 minute, actually got a 5 minute break here, which is perfect. 5 minute relevant break of structure, and then you've got a efficiency fill on the 5 minute as well, right? And you've got the M1 failure swing. Okay, so in an ideal world, my entry would have been on the M1 push up, final push to the high. So from this candle here, push up, right? That's my M1 supply zone, and that is where I ideally would have liked to have entered. I wasn't on the chart for that moment in time, so I actually didn't manage to enter there. However, I did manage to spot the trade playing out not far afterwards, okay? So when I saw it playing out, I actually took an entry. I took an entry, my stop loss was 7.1 pips. That's what I can tell you for free. So I entered about here. All right, so again, not the most ideal entry, but you know, 7 pips stop loss isn't terrible, right? But this was the optimum entry that I actually wanted to go for, but I didn't because I wasn't on the chart at the time, so I missed the entry. But either way, this was the entry that I took. Why did I take that entry? Why did I think that it was still okay? I thought it was still okay as an entry because I knew that the risk to reward would still be decent. Why? Because my target would at least be this low, right? And I actually think I may have had a better entry than this. It might have actually been 6.1. Yes, it was. Apologies, guys. My entry was a 6.1 stop loss. Okay, so because I remember my trade was at least a 6R, and my first target was at least down here at these lows, right? So I knew that it was going to be a good enough R&R, so I believe that it was worth me taking the entry. Some people might ask, you know, why didn't I think that maybe, you know, my price might bounce off of this zone here and act as order flow? Do you know what I mean? Some people might think that, but this is where some people get it wrong, or some traders get it wrong, and this would have been me at one point as well. But this is actually now a smart money trap. Why? Because this was the inducement low, and it was mitigated by this low here. And although this is also an inducement, so it probably would give a reaction, price has now hit its 5-minute target in this time frame, hit its target at this external high. So that now means that this level is invalid, because price needs to take some kind of liquidity for it to then go higher, right? If it wants to go much higher. And I think it did, but I didn't think it was ready to go completely to the highs yet, right? So I thought this was going to get taken out. So I knew I better target at least to this low, which is at least a 5R, but I wanted really this to be my target at the minimum, right? So at least be 6R for this low here. So if you see how it plays out, if I'm honest, it barely even gives a reaction. It kind of just blows straight through. And a lot of traders would have got caught in that. Thankfully, we don't, because we've got it right education, and we know that that is now a smart money trap, and that is now a 6R trade that I took and I was out of. So I actually left a little runner in because I thought it could go lower. However, once I saw the reaction, once I saw this, I was like, okay, cool, take the rest of it out. And this is actually another trade opportunity to get into from this demand zone, looking at order flow, that I missed. I'm not going to go into that trade, but if you look at this on the 1 minute, make it a bit clearer for you guys, back test it yourself. You've got this build up here, right? You got this build up, and then you've got, so you've almost got a couple channels here or to build up, and then you've got the inducement. And I say, so you got this here, right? Got that inducement, that's the inducement, and then again it gives you the aggressive push away and then starts moving away, right? So this was a trade opportunity here I didn't take advantage of, but it is an opportunity. And then, so by this point now, guys, I'm out of my trade, okay? But there is another setup that I want to quickly show you, and the setup is this. So at this point, I knew that this had taken the high, right? And then we had moved lower and hit a demand zone, which was a place of order flow, okay? So we knew that, you know, we had this inducement to the low, and then we were going higher, and this was the order flow. Overall though, the picture was I believe price was going to go bullish eventually and take out this high all the way up here. When that was going to happen, I did not know. But what actually happened next was cool, because if you look here at the top here, all the 5-minute price action is filled, right? See, there's no imbalances on the M5. Before I even get to that, let me quickly show you something. So if I actually got my actual entry that I wanted on the M1 and I exited here, this would have been a 16R trade. However, because I didn't, ended up being a 6R trade, right? And that's the difference between having a great entry and an okay entry. It's the difference of having almost like 3R more, 3 times the R more. Yeah, so I actually got a 6R when I could have got a 16R, but it is what it is. Just a little lesson in regards to entries. So sometimes it is worth refining, but you don't always want to over refine. All right. So what you can see here though is that each area is so this area here is filled. There's no imbalances. All price action is efficient, right? Efficient price action, apart from this zone here. So this zone here, if I go on to the 1 minute, you can see that even on the 1 minute, other than up here, which has been mitigated enough because the price actions mitigate this final push up, all of this is efficient price action, right? We've got a little gap up here, but again, it's kind of irrelevant. But what you can see here is this little demand zone, sorry, supply zone. If I was supply M5, this was a zone that could be used as a POI, because you know, it's just because of order flow, and because although price had moved up, taking out these highs, which is sufficient, a lot of liquidity, this low and these lows wasn't quite enough liquidity for the market. The market wanted more. So the market actually wanted to go deeper. So, but before it did that, it wanted to give us, induce, you know, market players to go higher. And I say that, what I mean is, if you look at this now, cool. Look what we have a look at, right? So it taps into this M5 supply zone. At this point, most people probably think we're going bullish now, right? At this point, I wasn't interested in any more trades for the day. I was good, I was out. But you got this zone here that people were probably looking at to try and buy from, right? You've got this fair value gap here. Maybe people want to buy from that fair value gap because people believe that we're now bullish. But if you go down to the 1 minute, if I was actually looking at taking a trade and I actually spotted this opportunity, you can see here that price tapped into the M5 supply zone and it had an internal inducement here. We had a relevant break of structure here when this low was taken. And then we had a mitigation of the highs here with these consecutive highs. And then we also had a failure swing when you got this high, fell to create a new high, and then it created a new low. So it's that now, what's price gonna do now, right? It's a great chance to get into another trade. So if I was just to enter here, stop loss above this high or probably that high to be a bit safer. Mitigation, and off we go. Bob's your uncle, right? Let's go on to the 5 minute for the sake of time. Don't want the video to be too long. And I would have then targeted these lows for sure to create a new low for them price to potentially then eventually go to this H4 demand zone. Or I'll probably take the most profits here, though, 80% minimum there, right? So we're going to the M5, I press play. There we go, aggressive move down, right? And then price kept going down to the demand zone. So this could have been a good trade as well. So at this low here, an 11R to the demand zone, 17R. Another opportunity worth back testing. But that is that. So as you can see here from this trade, trades, should we say, there's plenty of opportunities here to get in. So you had one trade here, 7R. Another trade here, potential 16R. I caught the 6R. Another trade here, I'm not sure what the R would have been. Let's say you entered really late up here, then surely you could have got maybe 3 or 4R. Yeah, nice 4R trade at least. And then another solid trade, 17R with a conservative stop loss, right? Or to be safe, let's be realistic with it, 11R trade. But it shows the opportunities that present themselves in the market when we have a solid understanding of price intentions and what price could do. Remember, you're going to take losing trades and we can never guarantee what price is going to do. But, you know, if price gives us our confirmations and it's logical and it makes sense, if the R and R makes sense, it's always worth taking the trade. So if you want to watch any more videos like this one, hit the video in the top right hand corner. But God bless, take care, and I'll see you all soon. Don't forget to hit like and subscribe. Take it easy.